So imagine you've just placed a buy position because the market's been going up and up and up for weeks, and you think that it's certainly going to carry on going up. Only as soon as you place that buy position, a piece of news comes out, or it really did just hit its all-time high, and now it's crashing down. This would lead to a blown account unless you had a stop loss in place. So a stop loss is a predetermined point where you have decided to exit the market and take a loss. So you pre-decide the maximum loss that you are prepared to take on any trade. In my opinion, a stop loss is a non-negotiable. So it needs to be on every single trade, and it needs to be pre-decided before you place the trade. Now let's have a look at another situation. Say you place a buy position, and in this situation, the market does actually continue going up. So now you're in profit and you're feeling really happy, and you decide you want to maximize your profits. So you leave it for a little bit, go away from your desk, and then you come back a couple hours later, excited to see how much further in profit your trade is, but now it's at a loss, and you're kicking yourself because if you had have just closed it earlier, then you would have actually closed with profits rather than now where you're going to close with a loss. So a take profit could help you in this situation. A take profit, similar to a stop loss, is a predetermined point where you're going to exit the market, but this time at profit. So setting stop losses and take profits is actually a skill in trading because you want to put them in the right place for the market that you're trading. The problem with putting a stop loss too close to your entry is that it will get hit too often, even if you're right. So you can get the direction right, but if your stop loss is too close to your entry, it's going to get hit, you're going to take a loss, and then the market's going to go in the direction you knew it was going to go in anyway. So you were right, but you've taken a loss and not made any profits. And similar to the situation I just explained with a take profit, if your take profit is too far away and you don't close your trade in time, you can end up being in profit at one point, but actually ending up in a loss, which is really frustrating. So you want to set your take profits and your stop losses at realistic points for the market that you're trading. So in this video, we're going to look at stop losses and take profits in detail. We're going to look at some beginner-friendly indicators that you can use to help you set them at the right points. If you're excited to learn, hit the thumbs up button before we get started. And if you want to see more content like this, hit subscribe to Thinkmarkets now.
So we're on Thinkmarkets now, and we're going to look at a couple tools which can help you with your stop losses and your take profits. So the first thing we're going to look at is the long position and the short position tools. I use these every day for every trade that I place, and they're really helpful for setting your stop losses and your take profits. So along the side here, you'll see all of your tools. If you go 5 down on Thinkmarkets, you get this one here. If you click the drop down menu, you'll see the long position and the short position tool are right at the top. You can star them to make them a favorite, and then they'll show up on your screen all of the time. But effectively, they look like 3 lines. And for the long position, you've got a dotted line going up. And for the short position, you've got a dotted line going down. We're going to use an example of a long position to show you how they work. So if I click the long position tool, and then say if I go to this candle here, say I want to take a buy position from this candle, you can see that this green and red thing comes up on the screen. So the red represents when you're at a loss, and the bottom of the red represents your stop loss, and the green represents when you're in profit, and the top of it represents your take profit. You'll see along the side here, you've got this green number here. This is your take profit value based on where your take profit is. Can you see when I drag it, it moves up along the side here. So this is really useful because if you're using your Thinkmarkets app to place your trades, then you know what your stop loss and your take profit are from the side here. So you can set the position tool up so you can see your trade visually. You can see where your stop loss and your take profit need to go. And then you can get the coordinates on the side here. You can get the price, and then you can physically put it into your Thinkmarkets app to set your stop loss and your take profit there. As you've seen, you can literally click on the side and you can drag it up or down. And you can also click into it and you can adjust it here. So say if you wanted to take 200 points, you've put in 200, and then you add 2 extra zeros at the end as well. And there you go, you can see that it's set it to 200. So here you can see the target is 200 points, but you can also see here the risk to reward ratio is 3.64. So the risk to reward ratio is really important with stop losses and take profits, because it means that for every point, pound, dollar that you are risking, you want to potentially get a higher number in profit. This means that if, for example, 50% of your trades hit your stop loss, if your risk to reward ratio is in your favor, you'd still end up in profit overall because your wins would be bigger and your losses would be smaller. So you always want to be thinking about your risk to reward ratio. You want at least 1 to 2, but preferably higher. There are many ways you can decide on where your stop loss and your take profit need to go. We're going to look at an indicator in a minute, but one reason why you might want to use the drag and drop method is, say, for example, you are basing your take profit on key levels. Let's just draw on a key level. Let's just say that this is a key level and this is where you're aiming to take your profits. Then you can literally drag your take profit on your long position tool up here. There you can see where your target is. And if you drag it along here, you can see where it hits it there. So we're going to look at an indicator called the ATR, which is really helpful for setting stop losses and take profits. So on Thinkmarkets, if you click on this symbol here, this gets up all of your indicators. So the ATR is the average true range. If you click on it, it comes up along the bottom here. The default setting is 14, which I usually think is fine, but always feel free to back test and play around with it and see if you can get any better results for the markets that you're trading and the strategy that you're trading. Ultimately, what the 14 stands for is 14 candles. So it's measuring 14 candles previously from the one that you've selected. So I'm just going to hover my cursor over it to show you here. So I'm hovering it over this candle. Can you see that the ATR reading is 20.12? So this means that for the 14 candles prior to that candle, the average that this market moved was 20.12. So 14 candles, all different lengths, if they were all added together and divided by 14, then it would come to 20.12. So that's the average that it moves. There are very few leading indicators in trading, and this by no means is a leading indicator because it's looking at past data. But what's very cool about it and what's very helpful for this is because if you have an idea on how much your market is typically moving, you have an idea of how much it's likely to move. And this is really useful for stop losses and take profits, because obviously you want your stop loss to be as close to your entry as possible, but you also want to give it that room that it needs to move, because you don't want it too close that it keeps getting hit on volatility, but you also want to have it close enough that you're not unnecessarily taking on too much risk. Also, if you've got an idea of how far it's moving, how far it typically moves, you've got an idea of where you should be realistically aiming for your take profit to be. So typically for the market that we're looking at now, the US 30, I like to have the stop loss at around 1.5 times the ATR. So in this case, the ATR is 20. So it typically moves around 20 points every 5 minutes, which means that you don't want to have the stop loss any less than 20, because you know that it might actually use that space whilst it's just moving normally. So I say 1.5, that brings it to 30. So if you click into it, you can add 30, 2 zeros, okay, and that's around where it should go. When you're setting the take profit, to be honest, I like to use the key level method to try and get as much profit as possible to get a good risk to reward ratio. And you can always check that here, the risk to reward ratio there. So in this case, 6.5. But you can also do it as a percentage of the stop loss. So you'd want to go for at least 1 to 2. So at least 60 for the take profit if the stop loss is 30, but preferably 1 to 3 or higher.
So now you understand the basics of stop losses and take profits for beginner traders. We looked at some indicators in this video. In the next video, we're actually going to look at beginner-friendly trading indicators in a lot more detail. So if you want to learn about new indicators that you can use as a beginner trader, make sure you hit subscribe to Think Markets now. And if you hit the bell button as well, you'll be notified when future videos are released and you won't miss them.